Ladies and gentlemen, good day and welcome to Sky Gold and Diamond Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel. Thank you, and over to you.
Thank you. On behalf of MUFG In Time, I welcome you all to Sky Gold and Diamonds Limited Q2 and H1 FY26 earnings conference call. On the management side, we have Mr. Mangesh Chauhan, Managing Director, Mr. Siddharth Sipani, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck that we have uploaded on Exchange and the company's website. I would like to mention a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mangesh Chauhan. Over to you, sir.
Thank you, Parth. Good evening, everyone. Thank you for joining us today as we discuss our Q2 FY26 quarterly performance. In the current quarter, company recorded its highest ever quarterly revenues and PAT, showing resilience and strength. Revenue for the quarter stood at INR 1484 crores, registering a growth of 93.1% year-on-year. PAT stood at INR 67 crore, registering a remarkable growth of 82% year-on-year. Volumes have been increased to 544 kgs per month for this quarter, registering a 20% growth versus Q1 FY26. Despite the elevated gold prices, Indian consumer has been resilient and continues to stand strong in the festive season. The demand for gold is not dampened. Instead, people are adjusting budgets by exploring lightweight designs, lower carat gold like 9 carat, 14 carat, or diamond stud pieces. This was reflecting in our quarterly performance as well, as now 18 carat business stands at 7%. Studded business has been now doubled to 1.5% of total revenue. Traditionally dismissed as a poor investment, lower carat gold jewelry is now being seen as a practical and stylish choice for daily wear. The mindset among young buyers is clear. Jewelry is meant to be worn, not locked away. Still, 22 carat continues to be favorite of the Indian consumers. Also, we can simultaneously say a shift from unorganized sector to a organized sector, as organized players are becoming innovative, providing convenient installment or gold exchange schemes, lightweight machine-made jewelry, tapping into e-commerce, and expansion of stores into untapped market in Tier 2, Tier 3, Tier 4 areas, thus ensuring higher than industry growth. Today, jewelry is not just a cultural enamel, but also a fashion statement, reflecting individuality and style. As Sky Gold and Diamonds Limited, we remain committed to blending this timeless heritage with contemporary design and craftsmanship. Our business model, operating on B2B platform, enables us to serve a vast network of leading jewelry retailers and renowned brands, making our products available in over 2,000 showrooms across India. The growth is a testament of our operational efficiency, customer trust, and ability to adapt to evolving market needs. Discussing our performance this quarter, currently our advanced gold model stands at 7% in Q2 FY26. We have also improved our working capital days cycle by 7 days in September 25 compared to March 25, on the back of the better inventory management Q2 FY26 compared to last year. This quarter, we have successfully completed the final transition for Sweet Bengal Private Limited. This business will adopt 100% advanced gold business, which is expected to strengthen our working capital cycle. Also, this company has tax incentive benefits under Section 115 BAB, resulting in improved PAT margins. To further expand our customer portfolio and deepening market penetration in the high-growth traditional jewelry segment, we have entered into a non-binding term sheet to acquire a majority stake in Sri Rishabh Gold, a reputed Mumbai-based jewelry firm. This acquisition marks as a significant step in Sky Gold and Diamonds strategy to establish India's largest and most trusted Mangalsutra-focused enterprise as the Rishabh Gold, known for its strong presence in the Mangalsutra segment, brings with it a rich client base that includes one of the largest jewelry brands. And this client relationship will be strategically onboarded by Star Mangalsutra, subsidiary of Sky Gold and Diamonds. To expand our international footprint, we have established a new B2B sales office, Sky Silk Jewelry Trading LLC in Dubai, UAE. This move is aimed at strengthening our foothold in the Middle East, a region identified for its robust demand for premium jewelry, particularly in UAE. The strategic presence in Dubai positions us closer to key markets and enhance our responsiveness to the regional demand. I am pleased to share that our exports have doubled this quarter, reaching around 150 crore, reflecting the early success of this initiative and reinforcing our confidence in continued global growth. To support our growth, we have strengthened our team by promoting Mr. Siddharth Sifani as a CFO, who previously headed the finance department as a group finance controller and brings over 16 years of expertise in finance and accounts, global fundraising, due diligence, compliance, auditing across diverse industry sectors. This will help me to focus on strategic business initiatives. Also, in order to strengthen our brand, we onboarded Mr. Viru Pakshi Kole as independent director, who headed Gems and Jewelry segment for Kotak Mahindra Bank. He brings with him 36 years of extensive banking expertise across different banking verticals. During the quarter, we initiated our GML program. The program is taking longer time than anticipated due to delays in documentation and supply constraints. Going forward, this initiative marks a significant step in optimizing our financial structure, as GML offers a lower cost of alternative to traditional working capital facilities. Our target is to scale up GML utilization going forward, reinforcing our commitment to prudent finance management and operational eligibility. During the quarter, we realigned the accounting policy for depreciation across Sky Gold Group. The same has been realigned with WDV to SLM so as to better match the depreciation expenses with the expected pattern of usage of assets. This change has resulted into currently half-year PAT to be higher by 0.008%. Now I will discuss our Q2 H1 FY26 financial performance. The consolidated revenue for the quarter stood at 1484 crores versus 768 crore, thus registering a growth of 93% year-on-year. The gross margin was 8.2% as compared to 6.5% on Q2 FY25. EBITDA for the quarter was rupees 99 crore compared to 38 crore, showing a growth of 157%. EBITDA margin for the quarter stood at 6.7% as compared to 5.1% of Q2 FY25, improved to 163 point basis on year-on-year basis. PAT for the quarter stood at 167 crore as compared to 36 crore in Q2 FY25. PAT margins for the quarter stood at 4.5% as compared to 4.8% in Q2 FY25, hence reducing to 0.26 basis on the year-on basis. The consolidated revenue, moving to the FY financial performance, the consolidated revenue of H126 stood at 2615 crore versus 1491 crore in H1 FY25, thus registering a growth of 75% year-on-year basis. The gross margin is 8.1% as compared to 6.4% on H1 FY25. The EBITDA for H1 FY26 was 171 crore compared to 76 crore in H1 FY25, showing a growth of 125%. EBITDA margin for H1 FY26 stood at 6.5% as compared to 5.1% in H1 FY25, improving to 145 point basis on year-on-year basis. PAT margins for H1 FY26 stood at 110 crore as compared to 57 crore in H1 FY25. PAT margins for H1 FY26 stood at 4.2% as compared to 3.9% in H1 FY25, and improving 34 basis on year-on-year basis. We have delivered a strong performance for H1 FY26 and remain on track to achieve our target revenue of 5,400 crore by 26, driven by new client acquisition, operation efficiencies, and enhanced management capabilities. Now I request the moderator to open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants that you may press star and one to ask a question.
Hello.
A reminder to all the participants that you may press star and one to ask a question. The first question comes from the line of Chandan Mishra from Finvestor. Please go ahead.
Good evening, sir. First of all, congratulations on very good set of numbers.
Thank you.
Sir, my first question related to revenue shares from after acquisition of Ganna Gold, sir. How much contribution did Ganna Gold have in our revenue share?
So we acquired this. We renamed it as Speed Bangle, and we completed the acquiring August mid. So we got 25-30 days to work. So we got 41 kg something sales in this quarter, and next quarter it will be 50 kg per month.
Sure, sir. 50 kg per month. Next question, sir, related to volume. Current volume of export order after establishing UAE office, sir.
So we already opened the way official opening was 7-8 November. We opened last month only in October. So this quarter it will be full-fledged sale will come. But again, we reached 150 crore sales this quarter by numbers by exports.
And sir, current run rate of volume, sir?
Volume totally. So we have done a 554 kgs of volume per month basis versus 454 kgs last quarter. So we have grown by 20% in volume.
So are we on track to achieve 650 to 700 kg guided for?
Yeah, we are on track. So in the second quarter, Speed Bangle 50 kg per month will also be added. So we are on track to reach 630 kg in next quarter.
Okay, thank you, sir. I will join the queue for further follow-up questions.
Thank you. The next question comes from the line of Deep Shah from Equirus Securities. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on strong set of numbers. Sir, a couple of questions from my side. First is on the festive shift side. This time around, Navratri and Diwali were a bit early. And when I see your export revenues on a sequential basis, it was largely flattish, which means the growth was largely domestic business driven. Should we consider this time around there was some preponement in terms of revenue booking? And third quarter around, we should, on a sequential basis, should we see some moderation in terms of revenue? And an additional question attached to it is around inventory. So if you see inventory days has improved, is it again because of the preponement of festive or am I missing something over here?
So again, about the first question that this quarter, Diwali was earlier, so we enjoyed the sales in September and all. So this quarter we are having a good orders of wedding season is going on for January, February and all. So this quarter wedding orders are very nice placed by the customers. So this quarter also is very good by volume also and revenue also. Again, the export side, we stopped the October month, we stopped direct export to the customers. And we told them that you can procure from the office. So this was a transition period of 15 days. Now from November month, they are taking directly from our office, the dispatches and all. So you can see in this quarter exports will be very good. So we direct export stop in October month for 15-20 days. And again, inventory days is a normal, decent days, which it is not about the pre-dispatch or something. This will continue in next quarter also and coming quarter also, inventory days will be at this run rate only. Because we have because of the ERP system and we are done better in the inventories aligning and all. So you can see revenue for next quarter marriage season is very good, and export you will see the office has started from October month. We have officially opened on 7th or 8th. We have kept the opening there, and our client, all the bosses of the corporates also visited our. They have given the testimonial also for us. And so November, this quarter, the export sales will be very good.
Okay. So on a sequential basis, this quarter around we did 300 crores of top line on consolidated basis. Next quarter onwards, third quarter onwards, should we see sequential growth in this 1,500 crore revenue base as well? And one more thing to it, any update on revenue guidance, because we have seen a very strong first half of the year. What will be the guidance for 26 and 27, both on top line and margin?
So we cannot talk on the numbers perfectly. We are not allowed to talk, but we are very good, and we are expecting Q3 to be the best of the quarter, this quarter, on the revenue side and the volume also. And again, export, you can expect 10 to 12% of the overall sales from next quarter onwards. And again, going ahead to 15-20% by 2027 March.
Okay. Any update on guidance, sir? 26 and 27 top line and margin guidance?
Already we have given the guidance of 5,400 crore and 7,600 crore, and a PAT margin of 4.25%. 4.25% we will be conservative saying. 4.5. Yeah.
Okay. Thank you.
Thank you. The next question comes from the line of Palash Kavle from Nuvama Wealth. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on very good set of numbers. So my first question is on margins. What was the driver of such a good margin expansion, and is this sustainable?
So you can see we have improved our gross margin by 0.20 basis. So our advanced gold business has improved from 5% to 7%, and our studded natural diamond jewelry has gone up from 0.7% to 1.5%. It's doubled the sale in this quarter. That's why our gross margins has gone up.
Okay, sir. And sir, again on if I look at your PAT margins, for this quarter, PAT margins are already at 4.5%. And gold metal loan has not started kicking in. So do you expect these margins to go up going forward again? Because the contribution from advanced gold and studded business will also increase. So is this a right assumption?
So we have implemented 8 to 10% advanced gold business. So the little bit impact is there of GML in this. 8 to 10% loan is shifted to gold metal loan. And again, the depreciation format has been changed. That's why 0.10 basis was that format impact, because we have changed from W2 SLB system. So again, some GML benefits is yet to come. 60-70% is going to shift in 2 quarters or something, because that process is going slowly because there is some availability concerns and documentation process on. But other than that, you can assume we can be at 4.25 or conservative 4.3, and GML benefits is yet to come. Little bit.
Okay. Yeah. And sir, will we see more acquisitions coming in? Because there might be more consolidation happening in the industry as there's a shift from unorganized to organized. So are you looking at more acquisitions going forward?
So right now there is no need for any acquisition in the company for coming forward 2 to 3, 4 years, because already we have all the products on board. We are into 80% product which is sold in the retail store. We don't want to be 20-25% which are very heavy, which are bridal jewelry or Kundan Polki jewelry, which is not our inventory, which are 5 lakh, 10 lakh, 15 lakhs inventory. And again, we were lacking tennis, so that's why we done a small acquisition, small company, because to onboard the largest retailer of the industry, which this company holds. So I don't think there is any acquisition plan in future for 2-3 years.
Okay, sir. And so again, on gold realization, if I consider your Q2 realization and just calculate on the basis of 900 kg per month that you guided for next year, your revenue looks very big. That is very big from your guidance. And even if I consider some advanced gold business contribution going up, still 7,600 looks lower than because of the gold price rise. So how should we look at this?
So this is the last quarter exit quantity we have told, 650 or something kgs, and exiting in the March quarter. So we have taken an average rate of 90,000-95,000 based on the, let's see how the rates goes, but we have taken a conservative number and we'll stick to that. And let's see how the gold rates goes. But we have taken a conservative number, and 650 is our exit number for March quarter.
Sir, I'm talking about next year. Next year you have guided for 900 kg, right?
So we have taken the average rate of 95,000. If rates goes up and stand to 1,20,000-1,25,000, then the numbers will go up. But let's see how the gold rates is come down or whatever, how it plays. So where is the stability come, but we every time take the conservative number, and we'll stick on to 7,600.
Okay. And sir, any data on number of pieces shipped? Because as your product mix changes, I think amount of gold required would be lesser for lower caratage ornaments, but the number of pieces shipped must have grown higher than the gold volume. Is that assumption right?
So, I'm a number of, what are you telling? Pieces. Okay.
Yeah.
Okay. So lower caratage is very low volume. You can see India, 80% is 22 carat and 15% is 18 carat, and this 9 carat, 14 carat is below 1%. So it will take time to grow, 5 to 10 years to come up at 4-5% of the sales. So right now we are at 14-15% or 18 carat sale and 80% at 22 carat sale. And this 9 and 14 carat volumes are very low. It's growing up. It will take 5 years to grow. Yeah. So again, 22 carat is a major leader in India.
Okay. And the last question, how do you see gold prices in next 1 year?
So I think we are seeing from last 20 years, we have seen a huge amount of investment by route of ETF and sovereign gold bond, which was not there 5 years, 10 years back. ETF was not there so much. So ETF is buying like 150, 200 ton per year, and central banks are buying. So I think gold is, I think will appreciate. I'm seeing in next 3 to 4 years, gold appreciating by 20-25% yearly basis.
Okay, sir. Yeah, that's it from my side. Thank you for your answers and all the best for upcoming quarters. Thank you.
Thank you. The next question comes from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thanks for this opportunity and congrats on good result. Definitely we are seeing some improvement in the inventory, but still the working capital, this operating cash flow continue to remain negative. It's over 100 crores. So can you give any indication when it is likely to neutralize or come into positive?
So surely we will be cash flow positive after 27 March. We'll be short in 27 March by 70, 80 crore, 100 crore. We have already raised the debts for that. So we'll be surely cash flow positive after 27 March when our PAT will be above 300 crore and above.
So you want to say 26 will be negative and 27 will also...
7 March, after 27 March will be positive 100%.
Okay, fine. And so this metal loan, is this likely to help it to improve this negative cash flow, and how much it can improve?
So gold metal loan is just a change from CC limits to cash limits to gold metal loan. It will not change the cash flow structure, but it will help us to reduce our the interest cost and borrowing cost.
Okay. And the advanced metal, that is basically job charges, not the full revenue.
Yeah, only job charges. That will again help us to improve our working day cycle and cash flow positive. That's why we are telling that we are targeting to be at 10 to 12% by 27 for advanced gold business. And that will again help us to reduce our working cycle, and we will be cash flow positive by 27 March. And again, export business is of less credit, and that will also help us to improve our working cycle. So advanced gold business only the making charge is done by the billing, and that will only add up to revenue. That will help us to add our gross margin and EBITDA. That's why our gross margin this quarter also was better because of advanced gold business wise.
And just to clarify, this Ghana bangle was 41 kg per month in the second quarter, and this will increase to 50 kg per month.
So already we got 25-30 days to work after acquisition. So we have done 41 kgs in 25 to 27 days, but average will be so next quarter 150 kgs will be added.
Okay, so we had only 21 days consolidation in the
25 days, yeah. Consolidation for about 2 months, but we got 25-30 days to work with transition period and all.
Right. Okay, sir. Thank you very much.
Thank you. The next question comes from the line of Smita Gala from RSPN Ventures. Please go ahead.
Thank you for the opportunity. Congratulations on a good set of numbers. Just wanted to understand more about the gold metal loan. How does it work? What sort of margins does it require? And what sort of limits do we get? And what is the maximum debt we can get on the leverage that the balance sheet will provide us?
So we are at a net debt of over 430 crores, so we can go up to 75% or 80% of limit. That is 350 crores. So that will help us. Gold metal is available for 3.5% of interest cost, and other expenses will come up to 4% versus 9.5% for the CC limits. So we'll save 5.5% of interest going ahead on the borrowing cost. So we can go up to 75-80% of the limit of gold metal loan, and we have to keep a 10% margin for that to avail from the CC limit we have. So we can, if we have a 350 crore of limit of gold metal loan, we can use up to 310 crores of 320 crores of gold metal loan. So again, we can improve 0.25 or 0.2 basis of PAT margins when we avail. Already we have availed 8% of gold metal loan in this quarter. That's why our little bit PAT margins have improved, but coming quarters we will be availing the other. We are saying it from a long time, I think, but in this point we are little bit delayed because of the availability and documentation and all, and there is a process and availability. Sometimes availability scarcity is there, so we have to go again to the CC limits and all. But slowly we'll go up to GML by 75-80%.
Just I missed it. Just to reconfirm, what will be the total debt which you can take with gold loan and the other debt which we can take on our balance sheet?
So I will repeat from if our debt is 430 crore, we can go up to 80% of 430 crore to gold metal loan, which will be approximately 330 or 350 crore.
I am talking about total debt with gold metal loan and other debt also. At the moment, 450 is a net debt. So where this 450 number can go maximum?
So 80% we can avail gold metal loan, 20% banks keep a gap of CC limits. I hope you understand. 80% of the limit we can convert into gold metal loan. Whatever limit we enjoy, 80% we can shift it to gold metal loan.
Yeah, I am talking about the limit. What is the limit that we enjoy?
So I will add. So at this point of time, we have got 170 crore of sanctioned GML facility. We are negotiating with other bankers as well to sanction the GML facility. We expect that this 170 crore, considering the current set of bankers, can go up to 350 crores. But that change in the banking terms takes some time, but the talks with the bank is ongoing. I hope I have answered what you were trying to ask.
Next question from my side is how is the progress on the new facility that we are developing going on? And
so we are planning to start the construction of this facility in from April 2026, and it will take 3 years to make the facility. And 2028 we are planning to open, end of the 2028, when our 1.2 ton of facility will be exhausted. And it's on a planning process. We are taking the quotation and all. It will take 4-5 months to plan, and we are planning to start making the facility from April 2026.
So to manage the funding, etc., for the construction, are we on track for the? So what are the plans for funding for the same?
So we'll need 150 crores for construction basis and 100 crore for furniture, fixture and machinery, which will be needed in 2028. So in 3 years, we'll put 50 crore from internal accruals, as we are expecting extra 50 crore in each year because so much acquisitions we have done, and again new products we have started. So we are expecting, we have onboarded Rishabh Gold also, and which is also an advanced gold business, Speed Banker also. So what we have given guidance, we are expecting 50 crore extra PAT each year. From this we will fund our construction part. In 3 years, every year we'll remove 50 crore and invest in that. And in 2028, we will need 100 crore for furniture, fixture and machinery. Tranches wise, we'll open after the 18 floor, we'll open 9 floor first, and in 4 years we'll open remaining 9 floors. So will take term loan for that furniture, fixture and machineries. That interest cost will be on the balance sheet, but our sales will be 1.5 ton or 2 ton that time.
One final question from my side. We have enabled a higher borrowing resolution in the board meeting. So what was the rationale behind it?
So it is more to do with the operational part of it, because as per the act, we need to have the approval of the shareholders per se, and that's why we have gone for a higher value per se, because this is more from a long-term perspective.
Okay. Thank you. I'll join back the queue. That was it.
Sure.
Thank you. The next question comes from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Sir, can you give a split of the volumes that we have done during the quarter between standalone, export, Star and Sparkling? And Ghana, you have told that you have done 41.
Yeah. In terms of volume, we have totally done 544. Out of that, in Sky, it is 400 odd. In Star and Sparkling, it is 55 each.
55 each?
Yeah.
Okay. And out of this total, how much would be export, volume-wise?
In terms of export, since export is 10%, I don't have that number, but broadly it should be close to 40 kgs per se.
40. Okay. That was all. Thank you.
Yeah.
Thank you. The next question comes from the line of Agastya Dave from CAO Capital. Please go ahead.
Am I audible?
Yes, sir, you are audible to us.
Thank you very much for the opportunity. Excellent execution, sir. Your numbers have been very, very good. Sir, I had a question on CapEx, which you have answered. So the only other question that I have is, when the results came out last quarter, there was a lot of selling from the promoters, and it was executed in a very destructive manner. I mean, it was done very aggressively, and it completely decimated the stock price for a few months. I just wanted to, sir, it's your shares. I don't have any say in that. But is there any other plan, sir, another round of selling from the promoter side, or are we done for the time being?
So we have already done for 2, 3 years or 5 years from here. So we have appointed a good branded merchant banker for the execution of last 2 quarters before, but there was some execution lag from the merchant banker side. So
Right.
I accepted and apologized for that, but there is no plan for.
It's not your fault. It's not your fault, sir. If the execution was screwed up.
I understand, but we apologize again, and there is no plan for 3 to 5 years for any dilution from the OFS also and for the dilution also, because we are nicely funded, and we'll develop this facility from extra, what we have guided the PAT, we'll make extra. We are expecting good PAT extra from these 3 years, what the acquisition we have made, and we'll take out every year 50 crore fund from each year from this extra income we'll make and deploy in that. So there will be no outflow from the guidance PAT, we assured it. And
Understood.
again, this is the.
Understood. And so just for the sake of repetition, you said 150 crores will be the total CapEx for the new facility, and it will be 50 crores per year for the next 3 years, right?
Yeah. 26, 27, 28.
Perfect, sir. Thank you very much, sir, and all the best, sir. Again, sir, on the operational side, the execution has been very, very good. So congratulations for that, sir.
Thank you.
Thank you, sir. Thank you.
Thank you. The next question comes from the line of Dipanshu Suman from Sattva Ventures. Please go ahead.
Hello, sir. First of all, congratulations for fantastic result. I think quarter on quarter we are executing very well.
Thank you so much, sir. Thank you so much.
Double check that industry has declined by about 15 to 25% in terms of volume, and we have increased by almost a similar rate. So what kind of contribution are we getting from the new clients what we have acquired in last few months, like India, Aditya Birla, the India guy, the Carrot Rain and Reliance and PM Gadgil, etc. So what kind of say volumes these guys have started to contribute?
So again, CaratLane is at 10 kg per month, 10 to 12 kg, and again, Aditya Birla started with 3-4 kg per month. And Reliance is yet to start because the process is getting over and orders are getting to come because we are already onboarded, we have done the agreement phase and all. PN Gadgil also, we are at, I think, 6-7 kgs per month, started from 1-2 kg, and now we are 6-7 kg. So we are getting the volume from the new client also, and the existing client is the major leader to give this growth and all. So again, we are onboarding new clients every quarter, so this is also helping us to gain the volume, and existing client also help taking the lead.
Okay. So, can you give the number for your top 3 clients, how much they are contributing in percentage, and how much are coming from top 5?
So, top 3 is 25 to 27%, and top 5 will be 30% or 32% something. 35%.
Okay, so the top 5 guys are contributing about 35%.
32%, 30 to 32%.
Okay. Okay, understood, sir. On this new acquisition, what we have done for this Rishabh Gold, it seems that you have acquired 51%. There are 2 parts on this. One thing, what I saw that this guy does about 49 crores of revenue annually, but about 3.5 to 4 crores of EBITDA. So on advanced gold business, why the EBITDAs are so low? Have we seen their numbers, etc.? Why the EBITDA is so low? Because if they are doing advanced gold, it should be higher.
So basically, with Sri Rishabh Gold per se, we are expecting that the operational efficiency to flow in the long term per se, and that's why we have done this acquisition.
So this company has India's largest jewelry brand onboarded this company and has a volume of 40-50 kg of the largest brand. So this will come out of umbrella, and this will help us to improve our advanced gold business much better.
Okay, understood, sir. And do we have any plans to increase the stake because we have acquired 51%? So are there any plans that we can go to say 100%?
Yeah, we have just acquired. This will take also 3-4 months. So we'll work for 1 year, and we'll see in future we'll acquire 100%.
Okay, and the promoters are intending to sell up to 100% also.
Yeah, in future we'll take the decision, but right now they were intending to sell 51% because smaller manufacturers are not able to cope up on the designing part and the larger facilities they want to work. So we have a large facility at Star Mangalsutra, and they will come to our facility. We'll shift this facility to our facility, and the larger brand of India will be onboarded by us.
Okay. So your advanced gold business, I just missed the percentage. How much percentage of revenue has come from advanced gold, and what is the exact number? I think it's about 22 crores, advanced gold.
In terms of advanced gold business, in terms of volume, it is 6% of the total volumes.
Okay. And in terms of revenue?
Revenue in terms of that, I don't.
You mentioned
around 8 crores in terms of absolute revenues.
Okay, 8 crores from advanced gold has come in. So about say 60-70 basis point and gross margin improvement might happen because of this advanced gold. This is about 60
already we were at 4%, we came up to 6%. That's why our gross margin has gone up by 0.2 basis.
Okay.
Because of the diamond jewelry sale has expanded and advanced gold business has expanded.
Understood, sir. So your 170 crore GML facility, what you have got, how much of that you have utilized, and at what rate this GML facility is coming in?
So out of 170 crores, currently we are utilizing close to 40 crores. It comes at a overall cost of 4%.
Okay.
As of the time that I got. Yeah.
Okay. So can we utilize the entire 170 crore in this financial year?
Yeah, we are targeting that. We will ramp up the GML utilization, and we expect to utilize 150 to 170 crores by the Q4 of 26.
So are there some say hindrances in this? Because if the sanction has already happened, then we can move into that number quite fast.
Basically, there are two hindrances. The sanction has happened, but the bank documentation is taking significant time. That's one thing. And secondly, there are also supply constraints because we have to order the GML and they procure the metal from their suppliers in the. So there are supply constraints, and that's why the offtake has been a bit slower. As we have already indicated in the past, that we endeavor to increase the gold metal loan utilization because it is a PAT accretive proposition. So we are working on both fronts. One is faster conversion of the current limits to GML facility. Parallelly, we are also talking to the current bankers as well and trying to get the additional GML limits as well.
Okay, understood, sir. So last point from my side, we have announced a very large order from the Malaysian client. How we are moving on that, and is it not going in the way what we were thinking?
No, it's going properly. They were just waiting for our Dubai office to be started because there were some gold prices differences between India and Malaysia, and Dubai prices are same. India prices are much better, higher, $10-15, reducing the import duty also. That's why they were waiting for 25-30 days. We took some time because Dubai has very strict norms to open the office, and we took 3 to 4 months. We were expecting 2 months, we took 4 months to open. So now from November, you can see the average of the Malaysian customer, which was 30 kg or 35 kg in 2 months, it will go up to 40 kg per month in this quarter because they were also waiting that we can avail the goods from Dubai office that will benefit them. So the Dubai office was open in October month, but it was fully functional by 7-8 October. We gave the official opening also. And I think by March, we'll be at, 50, 60 or 70 kg per month. Let's see. But now the office has opened and very easily we'll operate, and it will be easy for them also to take the deliveries and all.
Understood, sir. That's fine. So just on this thing, on Dubai opportunity, so what kind of, say, market size does this particular market have? And I know that you can move from Dubai to other areas also, but in terms of just the opportunity size, what can be our opportunity size from this particular market in terms of the overall market, and how much we can reach in, suppose, say, 3-5 years kind of time period?
For UAE market per se, we are very optimistic. We have identified UAE as a strategic growth market, and our export target of reaching to 15 to 20% was based on our presence in this segment. Now our strategy is to be closer to the customers per se, and we expect that we are on track to reach 15 to 20% of the sales per se by end of 2027.
So again, I will add that we will serve Singapore, Malaysian client also from UAE office. So we can serve all the UAE country and again Singapore, Malaysia. And our sales head and team has already started promoting our sales, and we kept an event in UAE on 9th of November. We sponsored a jewelry award, and we distributed award to all the major clients. We sponsored that, and 7-8 was the opening of that, and we expect to be 20% by 2027 March.
Understood, sir. So in a way, what you are saying that there can be an export opportunity of about 1,500 crores as by 27, and out of that, because you are opening this new facility, so that might contribute 50 to 70% of increment. So whatever we export, we do, right?
Yeah, so 15 to 20% we expect by 27 March, and when new facility will be open in 2028, we'll analyze how we have reached, how the market is going, and we'll give the guidance after opening the new facility what the export will play much in 2028, 29, 30. But again, this will be play a key role in our vision and our dreams to achieve 4.5 ton in 2031, 32.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Nilesh Jain from Astute Investment Management Private Limited. Please go ahead.
Hi, thank you for the opportunity, and firstly, congratulations on a great quarter.
I have only one question. Can you help me understand why is there an increase in capital work in progress by like almost 110 crores? Is it for the land for the new plant facility or what is it?
Yes, this is for the new project. As of March 27, this balance was parked in other assets per se, because we have just given the advance while the final sale agreement was not executed. This the sale agreement got executed in the H1 of 2026, and that's why the amount is showing in capital work in progress.
Okay, sure. Thank you so much, and I wish you all the best.
Thank you, sir.
Thank you. The next question comes from the line of Sajal Agarwal from Clearview Equity. Please go ahead.
Yes. So, sir, I have couple of questions. So, the first one is regarding the EPS. So, as per the latest earnings release, so your Q2 25 EPS was 3.37 on a standalone basis, which has only increased by 6% to 3.59 in this quarter, while the PAT has increased by almost 53% over the same period. So we know that you have diluted some equity around 10 to 15%, but this is a huge difference. So can you explain the reason behind this?
So EPS is based on the total shares outstanding per se. For the Q2, we have done the weighted average of the total number of shares which was outstanding. That is why you are seeing this EPS to grow only from 3.37 to 3.36 because of the increase in the base of equity shares.
So sir, is the increase at this quantum? So because from my understanding, you have diluted around 10 to 15% of equity over last 1 year, right?
So it is based on the number of shares outstanding and the total number of days it was outstanding. So this is a weighted average per se. So you are asking from Q1 26 to Q2 26, or which period?
Last year Q2 25 to this year Q2 26.
Q2 25 to Q2. So that impact was on account of the weighted average, and secondly also on account of the bonus shares which was approved in Q2 FY25 per se. So the impact of the bonus shares have also came. So that is why there is a.
Okay, sir. Sir, my next question is, so as in the last earnings call, we discussed that our margins and revenue dependent on both volume and price of gold. So I just want to understand, what if the gold prices fall by say 20-25% in the next 2 years? So how it will impact our margin profile over the next 2 years? In case we say that the gold prices fall from 1 lakh rupees to 80,000 over the next 2 years.
So you can see our margins are on percentage basis. You are telling perfectly, but gold is appreciating in this set from last 15-20 years. We see 10 to 12% appreciation is there. Whenever it is a fall, gold falls by 5 to 10%, so this does not change our margin. But when gold falls by 25% or 20%, we revise the quotation with the customers for 6 months or 12 months. Whenever gold comes to the normal price, then we revise the quotation. So whenever it is initially in COVID only, gold came down by 15% or 10%, I think. But you can normal say, you can see gold is appreciated. Whenever if gold falls by 20-25%, we revise our quotation with the customers, and customers also know that when the gold price comes down, the quotation will be revised.
Okay. So sir, in the near term, you say 1 or 2 quarters, will it impact the margin in that case?
Not because gold is, again, it is from 1 lakh to 1 lakh 20,000, 25,000, 30,000, roaming about 120 to 30,000. So 5 to 10%, we, again, customer knows that there is no change in the quotation, and margin also will not change.
Okay. Thanks a lot, sir. That's it from my end.
Thank you. Thank you. A reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Raj Saraf from Fininvestor. Please go ahead.
So congratulations on brilliant sets of numbers.
Thank you, sir.
So I have a question regarding the guidance, though you refrain from giving it, but what I mathematically calculate, our guidance of 5,400 and 7,600 crores for FY26 and 27 is given for the gold price is 90 to 25,000. So right now the gold price is above 1,20,000. And if I calculate the revenue even at 650 kg volume, which we intend to achieve by this financial year, and by subtracting 10% of advanced gold business, which we might be intending to do by this end year, so the revenue easily can cross 8,000 crore. And even at the current run rate of 544 crore per month, we are even overachieving this year's guidance. So how to look at the whole scenario, sir?
So you can see we have taken the 95,000 of 22 carat. So gold, you are telling 20,000, 25,000 is a pure rate. So 22 carat, it will come to 1 lakh or something. So there is a gap of 10%. I agree that gold has gone up, but carat rates are also changing. We have around 9 carat also. 18 carat percentage is also going up. So we have conservatively taken 95,000. So again, if gold goes in this moment and remain at higher level, I agree that the revenue amount will change. But again, some carriages are changing. 80% is gaining the shares. That's why we have taken the conservative number of 7,600 crore. But if gold does not go down and keeps on moving or on this rate, 100% there will be change in the revenue.
Okay. So right now we are having capacity of standalone, I think 750 and subsidiary Star and
Speed and sparkling and 1.2 ton per month we have the capacity.
Including Ghana and Gold, sir?
Yeah, that renamed as Speed Bengal. So including the 3 subsidiaries, we have 1.2 ton capacity which can be utilized in 2028. Yeah.
Okay. And sir, the gold prices has actually exceeded, I think, beyond everyone's expectations. So how confident is the management to reach the run rate of 900 kg by FY27?
100% will reach because as we were also expecting that gold prices are going up and second quarter we were also seeing that how the customer behave. But customer buying was very aggressive because of the gold prices going up. So earlier you can see when our parents were there 10 years back when gold rate used to go up, there used to be a slowdown of footfall by 25-30% because earlier parents used to say that gold price is high, we can buy after 6 months or 10 months. Nowadays there is a data available with every youngster, apps are available. Everybody knows that gold is a appreciating asset. So customers, when they have money in the pocket, they want to buy at that time only. So buying was very aggressive at the Diwali time in the customer level also and before Diwali also because everybody is in that mindset that gold is going to appreciate for love here from 3 to 4 years or 5 years because of the central bank buying and ETF has also entered into the market aggressively. So customer weight level has gone up with very much higher because 6 years back customer buy the jewelry for 1 lakh rupees, now he's getting 4 lakh rupees after cutting the making charges. So in 6 years, 4x or 3x returns as given by the gold to the retail consumers, mostly to the ladies who are buying. So they are very confident that faith level has gone up. So we are seeing very huge demand in volume also and revenue also. We are very confident we'll reach 900 kg.
Okay. So Ghana and Gold capacity or our businesses is entirely of advanced gold biz?
Yeah, totally advanced gold.
Okay, so right now we are right now, sir, we are doing 6% of advanced gold business. Am I right, sir? If I perceive.
Yeah.
So going forward, if you are guiding that 50 kg per month is going to come from Ghana and Gold, and the same rate will continue or even go further. So that means 10% of our volumes are coming from Ghana and Gold, and the 66% is already we are doing advanced biz. So can I perceive that more than 15% is going to be our advanced gold biz by this end year?
So we are giving conservative 10 to 12% because 50 kg we are sure from Speed Bengal. And again, how the volumes come in next quarter, so we can calculate the percentage. But again, you can assume 10 to 12%, 100%.
Okay, sir. Congratulations once again, sir, and very much happening to see you even increasing our volumes on standalone basis also, and that's what we are actually looking for. Thank you very much, sir. Congratulations for these numbers, and even wishing you best for the future endeavors and even on your export and all acquisitions further. Thank you.
Thank you, sir. Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question for today. I would now like to hand the conference over to management for closing comments.
Thank you so much to our shareholders for supporting us every time. So we management assure you the performance we are giving from last 2-3 years and going ahead, and hope you are with us for a longer time. Thanks so much.
Thank you. On behalf of Sky Gold and Diamonds Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.